Hello traders, welcome to today's video. It is Monday the 18th of September and this is your Bitcoin 5-minute update. So 27,200 has been a level that we had been talking about for quite some time. This was the main target for the reversal after we saw the deviation from these lows down here. Now the reason being for that is when you have these big impulsive moves, like with this one being three waves, kind of impulse down, correction, another impulse down, and then reversal, right? You are looking to retrace the entirety of that move, with this here being the big first impulse that we had down. Once again, as we continue to see, every time there is a big move, it does basically recover the whole thing. So we've always been looking at this as being the most likely target. Okay, this is why I've got this little red box drawn around here, and this is where we do have the major confluence. Now we had that momentary resistance around the 786 as we came into 4-hour and 1-day gaps and repaired those imbalances, but realistically it was these 4-hour ABs up at the top, the monthly level, which was an important level that we have been looking at previously, and also coming into these Fibonacci retracements here, which is the 618, the 702, and the 786 here, which are the TC fibs, the ones that I like to trade from as like a better alternative to the golden pocket. Now, I have taken a short here, so this was the level that I wanted to see price come into. Okay, as we've seen on this move down, you have impulse down, correction, another move down. On this occasion, move up, correction, another move up. And you could maybe do this as a 5-wave type of thing here also. However, that's quite a short wave, so Elliott wave people probably wouldn't consider it to be that as the case. But yeah, the confluence is here. Okay, so this is where you would expect price to have gone. There have been loads of trades that we could have had in between, but a very strong start to the week, which is interesting considering that if you do look at legacy markets, they are continuing to pull back. So the ES, S&P 500, NASDAQ down significantly again today as we go into the weekly open for equities and indices over there. So I do believe that this is going to be strong resistance. And I am happy to be in a short position from this zone here, so that 27,200 area at the moment. Now, invalidation for that obviously would be if we are to go taking out the highs, and if you are looking at this as being a local high, then you would then be looking to correct all of this move and to come back in and do the same thing that we keep doing and repairing imbalances from the opposite side of the move that we're currently in. Another thing that is important to be aware of today is that there is the CZ Binance versus SEC case hearing is today. So that will be 1 p.m. Eastern, 5 p.m. UTC. I don't really have a strong opinion on it. I'm not too bothered, but I get the feeling that it may not be as clear-cut of a win that a lot of people are expecting for Binance. I know that the SEC have had some big losses recently against Coinbase, against the SEC, but you've got to remember that they are domestic companies that are basically pushing the agenda that the US want, with keeping their crypto offerings in-house, working towards the ETFs, working towards just physical delivery of the Bitcoin from the spot side of things, whereas Binance, probably a little bit in competition to that, maybe aren't going to get the same kind of favorable treatment that Coinbase, Grayscale, and other similar cases have had against the SEC. So that could be something very interesting to watch. Is this going to be another major factor in the general but the general movement of crypto centralized exchanges out of the US market in preparation for the ETFs, which are going to happen? Now, the centralized exchanges are still going to have a place in the rest of the world because the ETF will be a US traded fund. But yeah, I do believe in this whole narrative that is moving away from the US. The US offering for crypto will be through the ETFs when they are approved, and that centralized exchanges will have less of a part to play. So it will become more DeFi and then ETFs moving towards legacy markets. But just a little opinion there, something to be aware of. Now, if this is to continue higher, the last thing I really want to cover today is the similarity between what we're seeing now. So I've drawn a little fractal on here. What we're seeing now and what we saw in 2019. 2019, a very, very similar phase in the market where there was just a lack of interest. It was a lot of sideways movement. So you had this early year rally out of the previous bear market in 2019 that had a really good rally up until summer. Then Q3 being very much consolidation. You had this China unbans ICOs news, which could be a similar thing if a Chinese exchange wins against the SEC. Are we going to be looking at something similar with a deviation out of a very, very low volatility range, then a move up, which comes back into the previous consolidation that it did have, but ultimately that got retraced. Okay, there just wasn't the interest there. It was a pretty manipulated move. But there is similarities with what we're seeing here. Okay, so we had that early year up until summer, big run up. Q3 being more of a consolidation. We have the deviation below a very narrow range with very little interest in crypto at the moment, very, very little volatility, very little volume. Is that going to be an opportunity if there is an example where this case does win against the SEC? Just using it as a potential narrative. It's not really going to mean anything in either way because Binance aren't going to start offering derivatives in the US again anytime soon. So it will be like an overreactive pump if they do win, I would imagine, because it's only really Binance US. Anyway, waffling on. This could be something just to be aware of. Would be taking out the highs here again around that 30K. And at that point, that's really when things can start to just collapse again because it's an over-exaggerated move, and you'd then be having to look at the real possibility of this being like a fake rally into the next stage of the market, which is that further consolidation before we get the real run next year when the halving happens, when the ETFs actually start to get approved, and so on. So yeah, a little bit of a different stance on the analysis this morning, but just food for thought. So the technicals are fairly clear. Okay, we've hit into resistance. We know where that is. If this is to get continuation and this short idea does get invalidated, I would be looking above 30K. If not, then I think continue within this range, looking down towards that 25,200 to 25,400 if we are just to continue to play this type of range for a little bit longer. So yep, on that note, thank you very much for watching. Have a great day. I will see you tomorrow. I'll be live again, as always, a few times this week. So see you soon. Cheers. Bye-bye.